Hello, investors. This is Todd Thomas, Associate Portfolio Manager with Revere Asset Management. Today is Sunday, February 23rd at 11:30 a.m. Coming to you from Boca Raton, Florida, with the Revere Roundup Weekend Walkthru. As you can see by the Grotection gauge, we've got a big change from last week. Instead of the four coveted up green arrows, two of the arrows have been downgraded to protect mode pretty abruptly. Starting on Thursday, we had a notable change in the leadership stocks. Our 21 over 21 list was down 2.99% on Thursday, where 20 of the 21 stocks were down, and the S&P 500 was down 0.4%. So the S&P 500 clearly masks the weakness in the 21 over 21 list. On Friday, the carnage continued where all members of the 21 over 21 were negative and got destroyed for 6.13%, which was 3.6 times the S&P's 1.7% drop. We also noted that most of the monster earnings gaps and the power earnings gaps either outright failed and broke the lows of the earnings gap day or came back and are very close to the low of the gap day. So that's another sign that the leadership is under attack. On the short term, 21 EMA, both the NASDAQ and the S&P broke below the average, and we're right on the 50-day moving average, slightly above for the S&P and slightly below for the NASDAQ. We need two closes below the 50-day to change the outlook here. Both indexes are above the 200-day moving average, but we do have a yellow cautionary arrow for the medium term as both the Russell and the mid-cap index are below, and we're right around the 200-day moving average on both of those indexes. So let's go to the indexes. The S&P 500 made a new interweek 52-week high, but closed at the lows of the week. If we look at this index, we were able to break out above the 62.28 level, but quickly reversed, broke through the 80 MA and closed slightly above the 50-day moving average. Also, if you look at the NASDAQ 100, we really were not able to make a new 52-week high on this index. We made a new high in December, ramped an attempt on that high, but made a slightly lower high at 20,118. And then this week, we got up to 20,110 here for another lower high. So we've got a situation where we're making higher lows here this year, but have been unable to make higher highs. So this upcoming week is going to be a big week with several key earnings reports. NVIDIA will be reporting also on Wednesday, so that could be a report that kicks this index one way or another, either break through the lows, which is very possible, or moves us through the highs. So we will see. The equal weight index closed right on the 21 EMA, down 1.47 on the week. Still holding above the 21 EMA, so stronger than the NASDAQ composite. RSP right, basically on the 21 also. That's the equal weight S&P. Russell 2000 telling a different story here. Currently below the 50-day moving average, made a little attempt to get above the 50-day this week, quickly rejected and closed below the 200-day moving average. Don talked about putting this on as a short for Friday. As the team noted, the rounding and declining trajectory of the 50-day combined with multiple failures to break above it. And when Friday came along, it was so fast and furious. We were too busy exercising protection. We weren't able to get this on, but we had talked about it, and that was our intention. Same thing with the mid cap, rounding 50-day, Monday, actually Tuesday closed above it at the highs, but then was quickly rejected, failed, and closed just above the 200-day moving average. So the weakness mostly in the leaders, small and mid caps. Volatility index got above 18 on the week. US dollar slightly down on the week, slightly up on Friday. However, the real tell here is the bonds. Both the 30-year and the 10-year yields were down, which means bond prices were up. So it was a flight to safety or a flight to quality on Friday. And really, there were a few main themes that took place Thursday and Friday that changed this situation where we now have concerns over growth and valuations. And that started with the economic data Friday morning, where the PMI fell to contraction territory of 49.7%, 50 being the dividing line between expansion and contraction. And that was versus 52.9 last month. Also, the University of Michigan final consumer sentiment missed, coming in at 64.7, looking for 67.8. And finally, existing home sales declined 4.9% as higher rates pressure new and existing home sales. Oh, also Tuesday, Walmart, although they beat the quarter consensus earnings and sales estimates, they guided lower for the upcoming quarter and for fiscal year 25 on fears of higher tariffs as well as a consumer slowdown. So that started the fears of the slowdown. As you know, Doge concerns are also driving fears of a slowdown now. They've currently eliminated or laid off 40,000 government employees, and they're potentially looking at now cutting defense spending to the tune of $800 billion, also in entitlements. Overall, Doge's mandate is to cut government spending by upwards of $2 trillion. So while this is very necessary and good, this is a stark change from the Biden administration's high level of government spending, which helps stimulate the economy. So these fears are starting to creep in, and we saw that in the leaders as well as in the 30-year and the 10-year bond yields. China was able to close positive on the week, one of the only areas of strength. The IBD 50 closed the week down 12.3% after a very strong prior week. The ARK Innovation ETF was also down 10.18% after a strong week the prior week, indicating the leadership weakness. Bitcoin was not able to overcome an attempt to get above the 50-day moving average. So now it looks like we may test the lower end of this range coming up. And that's it for our index positions. Now let's go to the Magnificent Seven. NVIDIA's reporting on Wednesday. Overall, in this sloppy base right now of 26% deep, overall, the stock is really at the same levels it was last June. So we've gone basically 9 months with very little progress in NVIDIA to no progress. Overall, that's going to be a big report. We're looking at the flagship Blackwell numbers. Blackwell is our flagship chip, which began shipping late last year. Earnings and sales are rapidly decelerating also from 5 quarters in a row of massive triple-digit earnings and sales growth, now slowing down to 64% and 72% on sales. So although these are still extremely good numbers, you can see that this is a sharp deceleration of the past year and a half, where hyperscalers and everybody's been spending on their new GPUs. So we will see how strong Blackwell sales are and what their projections are for the new version of Blackwell coming out in the spring, as well as their new chip for next year. So we do not have high expectations that NVIDIA is going to save the market this time. Apple, one of the stronger stocks, green on the week. Microsoft, 4 weeks tight, closing at the lows pretty much every day on the week. Looking pretty negative there. Basically, there was also some news out from Cowen and Company. They came out with a report that said their channel checks indicate that Microsoft has canceled leases in the US with two private data center operators, which had contracted for a couple hundred megawatts of power. Okay. Basically, their point is that this points to a potential oversupply of compute position for Microsoft. This news comes as Microsoft is no longer OpenAI's exclusive cloud provider after they signed a $500 billion Stargate contract. Also, on February 12th, Microsoft lost a $22 billion government contract with the military for IVAS. So this could potentially be isolated to Microsoft. However, this is exacerbating the fears that general compute has been overbuilt, which is putting pressure on both NVIDIA and the chip companies, as well as the power companies here. We saw CEG take a big hit on this. Meta, after 20 up days, had a decline of 7.21% on the week. Amazon broke its 10-week moving average, also its 50-day moving average on the week. Tesla continues to trade below its 10 and 20-week moving average. Google broke its 10 and 21 week also here recently over the last few weeks, also weak. And that's it for the Magnificent Seven. I want to highlight a few stocks from last week and their action and what caused a lot of the weakness in the overall indexes. We talked about Walmart. That broke its 50-day moving average and its 20-day moving average on its lowered earnings guidance, sitting basically just below its 10-week moving average. United Healthcare down after the government is investigating them for claims practices. So that hit the stock to the tune of 10.9%, putting pressure on the Dow Jones Industrial. Microsoft, we talked about. GEV collateral damage down 10.8% in fears of these contract cuts by Microsoft requiring less power generation than originally thought. Axon failed cup with handle breakout. Earnings in 2 days down a whopping 24.9% on the week. And this is why you have to have discipline and not rely on just a pattern, okay? Beautiful cup with handle, early cheat breakout, and then huge 16.42% decline on Thursday. Okay, hit with a downgrade and then hit with another downgrade on Thursday. The first downgrade came on a falling out with one of their partners. So they have earnings this week, and we will see how they report and what they say about that. HIMSS, okay, the FDA coming out saying semi-glutide supplies are back in line, which puts pressure on HIMSS down 18.5% on the week. They may not be able to sell their weight loss drugs under the government loophole now that the FDA is saying supplies are back, which is good news for Lilly and Novo Nordisk. Kava, just an example of the restaurant group, which fell apart last week. Palantir down 14.95% on the week on rumors of the Department of Defense cuts potentially next. Did manage to close above the gap lows of the week, but down sharply off its highs Wednesday and Thursday. For earnings miss and lowered guidance, this was a growth stock looking pretty good going into earnings, which broke both the 20 and the 50-day moving average on big volume, down 21.6% on the week. AppLovin, a short report caused an 18.59% decline on the week, broke the earnings gap day back into this cut base But looking at this weekly chart and this massive run, this could be the end of that run for a long time. Alibaba, one of the positive ones on the week. Strong reaction to earnings. Mercado Libre, Brazilian companies, also a strong earnings breakout out of a double bottom base. So a couple of good ones to offset the bad ones for the week. And now getting into our watch list for the week. These are stocks that showed positive action, held the lows of their earnings gaps, and or held their 21-day moving averages. Not necessarily in buying position, however, on the watch list for potential buys down the road. We already went over Alibaba and Mealy, JD. We discussed this double bottom setup last week. Attempted to break through it on the week, closed just slightly below it. Now markets are just showing a cut base, but strong close, up 2.5% on the week on 2 weeks of good volume. So that's on the watch list. FUTU backed off just slightly, 0.34. May look to build a 3-week tight here potentially. We'll see. Potentially build a handle to this cut base. Very little damage on the week. WGS up 25.5% on the week, but also up 47.69% on the earnings gap. Did undercut it slightly, but closed just above that earnings gap low on the week. So this particular company is on the watch list as a new potential biotech leader. Eli Lilly, 3 weeks tight after earnings here. Tried to break out on the week, but got put back into this little upward flag above the 200-day moving average. Ferrari, very tight close, down 0.08% after breaking out of this stage 2 consolidation on an earnings gap. Take-Two Interactive, this is actually one of the strongest earnings gap situations. 3-week tight, okay. Nice power earnings gap, holding the 8 EMA, okay. Also holding the high volume close area. So this is actually one of the only or very few names that's showing positive post power earnings gap action. So we're going to keep a close eye on this one. AXSM, Axum Therapeutics, nice breakout here and follow through. They have a drug for narcolepsy, which is showing promise for ADHD. They also have other drugs that are doing pretty well, but this new drug is in phase 3, and that got that stock moving. INOD also an earnings play, not exactly in a viable position, but was able to break out and backed off quite a bit, but closed at a new 52-week high. Uber hanging in there, perhaps looking to build a cup with handle base. Expedia still holding its earnings gap lows, did retrace 2.75% on the week, but looking good. Boston Scientific grinding higher. DoorDash backed off 6.3% on the week. However, still holding above this earnings gap level. So that's still on the watch list. Penumbra earnings gap, decent close on the week. Doximity, one of our prior week price earnings gaps, held the lows of the gap, acting better than some, but did come in on heavy volume. So we'll see if that's able to hold these lows and continue to build from here. Spotify also holding. Palantir, ugly week, but ultimately did hold these lows, but undercut and stopped us out of our final position. HWN grinding higher. ArcelorMittal Steel looking pretty good after the earnings gap and holding the gap lows as well. So that deserves a spot on the list. TraderWeb, decent action and follow through from earnings a couple weeks ago. Was able to close above the 21 EMA and the 8 EMA, up 5.6%, closing at the high of the week. Affirm, ugly week, down 15.5%. Volatile name, still slightly above the gap low, but clearly in a volatile area. So watch it, but likely need to do a lot of work. Monday, same situation, held the gap lows, undercut it slightly. A lot of work to be done here, but watching it. Philip Morris, a good post-earnings gap and run. Besides Take-Two Interactive, this is another one that's done very well and held its 8 EMA and closed the week on the exact high. Plus, it's a defensive name. Another stock in the biomed area looking pretty good. Just slightly short of our $100 million in liquidity, but could get there fast if it breaks out of this little base. T-Mobile maintaining and holding this breakout. Royal Gold, along with some other gold stocks, attempting to break out of a double bottom base. GLD looking good too. CRS, positive close on the week. Little bit sloppy here with the market on the pullback, but held the 21 EMA. And that is it for the watch list. Now, finally, let's go over quickly the stocks reporting earnings on the week. About 19 names, which we will be watching. Snowflake, HIMS on Monday, IoT, not really in any position and broke its 21 EMA last week, but it's a stock of interest. Home Depot, just for the general health of the consumer and the housing market and the economy. Kava, to see what the restaurant situation is doing. Axon, see how this one reports after a terrible loss this week. Instacart, Maple Bear, Lemonade, Duolingo, an artificial intelligence play in language learning, as well as potentially other areas, did back off, pulled back into its pivot, but has earnings on Thursday. Workday has earnings on Tuesday, NVIDIA on Wednesday, TKO Group on Wednesday, Nutanix, which incidentally has a pretty nice chart pattern in the enterprise software arena, closing above its 21 EMA in a 4-week tight pattern. VST, another one with collateral damage from the Microsoft contract cuts. Reports. SMR, another Microsoft fallout stock, also reports on Thursday. Coupang, hanging in there, a Korean Amazon type play, reporting. And finally, Norwegian Cruise Lines. Finally, just a quick review of next week's economic numbers. Wednesday, we have new home sales. And on Friday, we have the very important PCE price index, which is the Fed's favored economic number as a measure of inflation. So we will see how that reports. In the meantime, that wraps up today's weekend review. My email is todd@revereasset.com. My Twitter handle is @ToddMichael70. Our phone number is 855-REAL-WEALTH. We'd love to hear from you. Please call and ask for Dan Stewart or Don Vandenbord, our head portfolio manager. And our YouTube is revereasset.com. So everyone have a nice weekend, and we will talk to you next weekend.